Welcome, Louisiana, once again to Let's Talk Money with Mark Provenzano. He is one of the founders of Hedged Private Wealth. I'm your host, Spike Spangle. We're going to be here for the next half hour talking to you about retirement planning strategies. Mark, how are you doing this week, my friend?
I'm fine, and it's a pleasure to have you with us, Spike.
Oh, no, thank you. It's my pleasure to be here. Even though we do have to talk about some difficult things today, we're talking about mitigating risk in the market. Now, that's a phrase we use a lot inside the industry, mitigating risk. I want to know, though, what that means to you at Hedged Private Wealth, how you do that for clients, how you can do that for folks who have maybe never talked to you before. So we'll talk a little bit about your review process. Before I do that, it's something we haven't done in a little bit. I would like to ask you a little bit again about the firm and yourself. Tell me about Hedged Private Wealth. This isn't one of those big box firms.
Correct.
It's your name on the doorway there. You're the one who decides how you're going to run the firm and how you do things. How do you do things at Hedged Private Wealth?
And you said it, your last sentence, Spike, you said it. We decide how we're going to run it, right? And we went into this business for that specific reason because we know that the big boxes out there, right? They're getting the sheet on the Monday morning with the bonds and say, okay, you have to move $100,000 in bonds this week. And even if Miss Jones comes in, a little Miss whomever, Mr., push the bonds, right?
Okay, yeah.
So we don't have anyone like that at Hedged Private Wealth. We have the plethora of the stock market, the bond market, the ETF market, no matter what it may be, whatever suits our viewers, right? So that's where we determine what's best for them. Because remember, you and I keep talking about this into nauseum. The fiduciary standard, and we
But it's incredibly important.
That's what we uphold because that is what we're in business for, to do what? The right thing for you, not for us. It's about you. So, and that knowing, Spike, about you comes from what? Us asking you kind of questions and uncomfortable questions at times.
Like you said, I think you've told us before that the first meeting, the first time that you get together, it's an interview, but you're not just getting to know the firm. You want them to get to know you. You want folks to come in and ask you questions. How do you operate? What is your investment strategy like? Do you help people more with accumulation or with decumulating assets? And can you help us with that estate planning or all of that? Is that more of the focus of the firm? Are you out there stock picking and hedging, or is hedging more about being safer in retirement?
It is, but we can do it all, and we do work with a great team at Hedged Private Wealth. We have access to the finest minds in the industry, and as you know, here at Foundations, we have Mr. Young out on the West Coast. We have smart guys up on the East Coast. And I like to think and say we have some of the smartest money managers on the street here with us.
Wonderful.
At Foundation. So, yes, but we can do all of that, what you said.
Well, one of the things we're talking about today is mitigating risk. And with what's going on in the markets right now, the downturn in the market, the numbers are not good. We don't know when they're going to recover. It is very different than what was happening during COVID when the market went down and came back up very, very quickly. So I wanted to ask, for a retiree, how do market losses affect you so much more when you're right at the precipice or at the beginning of retirement, or maybe you just started or about to? How do these market losses affect you more right now than in the beginning of your career of saving?
Well, Spike, you just said it right there. Where the retirees are now, either just entering or maybe the couple years in, it's vastly different. And you said the key word there, sequence of returns. That is what sets the whole outcome for how you're going to finish up. Because you have to realize on the sequence of returns, what we do is we run that report. We show you where you're beginning with all fixed interest credits, and we show you at the end. And then what we do, we flip-flop that. So that's a very different picture, extremely different picture on your sequence of returns. If you start out bad the first 2-3 years and you're taking RMDs, taking distributions, it's not a pretty picture. And that's one of the things that we focus on. We can do the accumulation phase of retirement. We can do the distribution phase. We really, really are good at the distribution phase because we know what levers to pull once that senior becomes ready to retire.
Right. So in sequence of returns, it's not really good right now. Are you having to talk to people right now about maybe taking a 6-month pause on their concept of retiring next year, or maybe saying, I would like for us to keep working if you could for a little bit, just until we can maybe wait this out or see if there's any kind of recovery in the near future? I know it's going to be different for everyone. I mean, if you have $4 or $5 million saved for retirement, you might be ahead and ready. But that also depends on what your monthly expenses are. So it's really different for everyone right now.
It is, and that is a very generic answer, right? But it really is, Mike. You know, like you said, if someone's sitting with, 7 figures and their expenses are very low, which we go through a cash flow report, right? They may be fine. They may not have to choose that hybrid retirement. And that hybrid retirement, unfortunately, that means you stay working a little while longer.
I was going to say, hybrid retirement. So it's not really retirement.
Exactly.
It's working part-time at 65. I don't know.
And who wants to hear that?
Yeah, but maybe perhaps at a higher level job. I mean, there are a lot of government employees and other people like that who maybe do contract work or they do consulting work as you get later. That might be something, and that's also something obviously you can talk about here at Hedge Private Wealth, is saying, hey, let's come up with a retirement strategy. This might be a time to think to yourself, how can I hedge my retirement? Maybe keep one foot in the door until we can see some of these storm clouds, some of these hurricane clouds start to blow out of the area. Well, one of the things we would like to do is the review, and I know that's on the bottom of the screen here. What exactly is the complimentary retirement review that you're willing to do for the viewers here?
The complimentary portfolio review, Spike, is really, it's 4 main items, okay? We're looking at how much risk do you have in your portfolio? Do you know that risk figure? What about the diversification? A lot of folks come to our office and they think they're diversified, but they are the farthest thing from diversified than you can ever imagine, okay? Because everything is what? Like we talk about off screen, on screen, everything's correlated, right?
Right.
So we got our risk, we got our correlations, okay? And we talk about the fees. What type of fees are really embedded that most of our clients, they never see? You can't find them. It's in the 14, 15 pages of statements, and it's not always viewable. Sometimes you have to add them up, the different fees. So that's what we uncover for you and discover, I like to say, uncover and discover.
Yeah.
And we produce that, we give you the income report, which is so important for, I like to say seniors, but the retirees.
So it's the income report of your savings, of your retirement, and how do you create an income from what you've saved, including in Social Security, for you, your spouse, no matter how long you might live.
That's correct.
Well, thank you so much for that. We're going to take a very short break. We'll continue to talk about mitigating risk. Folks, if you would like your own complimentary review on your retirement strategy, or if you don't have a retirement strategy, maybe you should get started on one right now. Call Mark right here, 888-339-2048. We'll continue to talk about how do you mitigate risk during these turbulent times of what's going on in the economy when we get back right after this break.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Let's Talk Money with Mark Provenzano. He is one of the co-founders of Hedged Private Wealth right here in Louisiana. I'm your host for the half hour, Spike Spangle, and we're talking about how you can mitigate risk here in retirement or preparing for retirement, because we know what's happening in the economy right now. To give you a quick definition of mitigating risk, mitigate, I got from one of my financial magazines, is to make less severe, serious, or painful.
Right.
I think a lot of people are feeling that pain
They
in their
are.
retirement accounts right now. So what are some of the rules that we would want to follow going into retirement? Do you aspire to the 4% rule, these numbers that are published out there on the internet? Do these still work for people today?
You know, Spike, I'm glad you said that, because some of the smartest guys in the industry that are not even really per se that are in our industry, but they're leading economists with PhDs, they're starting to take a second look at that 4% rule. And the reason for that is we're noticing when we have this volatility in the market, we have these downturns, investors are living longer, right?
Yeah.
So when you have the RMDs, the deductions coming out every year, plus you're losing, if there's a possibility of losing like we're experiencing right now, we were at the worst start since what, I think 29, I said.
Yeah.
So when you compound this effect, the 4% rule, unfortunately, for our viewers, they're starting to see, they're getting the data now that it's not working.
And the data doesn't lie. Math
Correct.
doesn't lie.
Thank
Let's just
you.
bring out a couple of numbers. Let's say that you're doing 4%, right? Inflation has just been announced at 9.1%. Just those two numbers alone, if you were taking 4% out of your accounts and the cost of goods and services 9%, that means what you just took out of your accounts is 13%, right? The markets are down 20 to 25%. We're looking at almost 40%
go.
drip out from your accounts because of retirement. So let me ask you, mitigating risk. Are your clients taking directly from their investment accounts, or have we set up other sorts of vehicles before we've gotten to straight up the investment accounts? I'm sorry, I'm asking you about annuities and so forth. Do we do this well before something like this happens?
We do, Spike, we do. And as a degreed accountant, we look at this from a cash flow perspective, right? And every big S&P 500 corporation does this analysis. They'll plan for the 1 year, 3 year, 5 years out, right? That's what their meetings are about. So why not we do it for the individual as well? Because you have to know your numbers. You have to know the numbers. We have to know the numbers, but the only way we know the numbers is what you give us, okay? And yes, you have to know that, because that's what's called planning and having a plan. Because remember, if we have a plan in place, you kind of feel pretty good, right? Because when we built that plan, we know when we're hitting the guardrails and we know when we go out of bounds. What do we do when we do go out of bounds? That's when we might rebalance. We maybe shift more to annuities, because the call for that is the annuity is a fantastic product. It's made to cover, number one, fixed expenses, right? I like to go a little further with that. From my background, academics and accounting, I like to include, which is a little bit uncomfortable sometimes, I like to include the fixed expenses plus the variable expenses, which makes it a little bit tighter for our viewers. But you know what? When these times come about, there's nothing to worry about. Because
you've
already know.
taken in some of those
Yes.
other variables,
Yes,
and you've been
yes.
able to do that. So there's a lot of folks out there who will put together a plan and they'll divide their numbers and oh, I think it'll be all right. But it sounds like you crash test, like you run the numbers over and over again with all of the different variables, and that's the difference between
Back testing.
a firm. See, I try to get away from that inside industry argument. So
You're right.
define back testing for the folks.
Back
out there.
testing.
It just means running it over and over again with different variables.
That's it, folks. That's it, Spike. And you know, we
Sometimes
have to,
you got to educate dummies
That's
like me.
oh, come on,
I
Spike.
gotta-
Come on, you know this stuff. But no, the back testing, we go back, and that's what all you big money managers do when they decide to have an investment. They'll backtest that investment and see what it has actually done in the markets with inflation, with high interest rates, with everything, with the commodity prices. They look at all of this and see how it actually functions. It can be from just a technical analysis or a fundamental analysis. And folks, you know what that is. Fundamental is the balance sheets of a company. Technical is usually the graphs, okay, the stock market charts, which I feel tells a story that a lot of advisors, they tend to say technical is not, but it is. When you look at a chart usually will show you, reflect what has happened in the past. When we go back to auditing, is going to happen in the future. And that all comes from where? The fundamentals. So it just gives you another view. We like to use that. We're not lazy. Let me just put it like that. In our work,
I was going to say,
in our work,
so
we're not.
You've got the CPA part of you that's part of your DNA. You've got the fundamental and the technical. And what I'll ask is then, are you able to relay this to any level of investor who wants to come talk to you?
Oh, easily, very easily. Because that's what we talk about our first meeting. Usually we'll gather the information, and our second meeting is going to really be more of showing what we have talked about. And the reports are very friendly. We're not going to, viewers, we're not going to give you 50 pages of reports. We're not going to do that. We're not going to do all types of Monte Carlo simulations and give you 100 pages to walk out with. Because usually when you do that, as we know, nothing gets done. So we already know what to provide you with and what are the hot buttons. We know what to look for from what you have showed us and what you have given us. So we really do, Spike, tailor their reports for them.
Okay.
So yes.
So for folks out there who don't know where their risk is right now, but they've seen their accounts go down.
Oh, yes.
They're nervous, they're uncomfortable, they might even be mad. I mean,
yes.
The Fed is controlling interest rates. This we are going to talk about on another program coming up in the next couple of weeks. What do these interest rates mean? Who is in control of it and what can you do? That will probably be next week because I know a lot of people are worried about this. More importantly, to get a complimentary review, tell me just very quickly, tell the viewers out there, what exactly will you look at in a review?
Folks, if you're nearing retirement, or in retirement and you would like a second opinion, we ask you to call the number below. Come see us, come have a cup of coffee with us, and let's discuss your personal situation. And what we lend to you and what you will receive as complimentary is a portfolio review, which consists of 4 main items: your risk report, your fees report, your diversification report, and the income report, which we like to say is the longevity income. Let's see what you actually have and how long is that going to last you versus market conditions. So only way you can find this out is if you come meet with us, and due to overwhelmingly response, unfortunately, for the next 15 callers, we're going to take you on.
Folks, tune back in right now. We're going to come back. We're going to continue talking about ways that you can mitigate risk. But first, make sure you call so you can get your own complimentary review, where Mark and his team are going to take a look at your investments, your risk, your taxes, as you still have that CPA, DNA inside of you as well, and all of that encompassing to make sure that you can be and stay retired. Call the phone number you see right here, 888-339-2048. More with Mark Provenzano. He is the co-founder of Hedged Private Wealth right here in Louisiana. Come right back after this commercial break for Let's Talk Money.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go? And who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Welcome back to Let's Talk Money with Mark Provenzano. He is one of the co-founders of Hedged Private Wealth right here in Louisiana, helping folks just like yourselves get to your retirement, be and stay retired. And today's program is about mitigating the risks that are happening in the market. But here's a strange one I wanted to ask you about. This has now been put into a risk category. It actually didn't exist there about 5 or 6 years ago. And now one of the characteristics of other outside risks to your portfolio is called longevity risk. Me living healthier and longer is now a risk? Can I go back to cheeseburgers and bacon then? Because I thought longevity is a good thing, and now they're telling me it's a risk. What does that mean?
You know, Spike, and yeah, you like to think just what you're saying is 100% true. However, as we know, we are living longer, right? That starts to pose a problem. The pharmaceuticals are getting better. We're living longer, less chronic conditions. So yes, longevity risk inside of your portfolio, viewers, that is a very topic that is not discussed often. Why? Because what the regular big box firms do, they cannot guard or mitigate against this type of risk. Because if you're just holding all stocks, you're just going to get the high point upon your passing, maybe a stepped up value. But longevity is much more than that. We have to make certain that your portfolio is set, it's in a plan, and we know that we take a longevity look to where how long do we feel, and this is where we get personal with our clients. We look at the medicines, we look at the health, we look at everything, we ask that. And we kind of get a gauge when the mother and father passed, right? I mean, we have to know that. So we want to make sure for you viewers that, yes, we do have longevity risk built into your plan. If you don't have that, if you've never heard this term before, come see me. Come see someone, come see anyone that's a fiduciary, because that is a very big part, like Spike, and thank you for bringing that up, which you just brought to the forefront, because that's so important.
Right, and so when folks come in, don't most people, after study I've read it, most people underestimate their own longevity. Say, well, I'm going to probably live into my 80s. When you do portfolio projections, can you give me like a typical age? What do you do for, if you got a relatively healthy couple who comes in 60, 62, how long are you taking their money out to last?
You know, with no comorbidities, we're looking in the 90s, because that's happening. That is actually happening with the invent and advent of pharmaceuticals. The pharmaceuticals are getting so great now.
My family living proof of it right now. I've got 2 grandmothers who are in their mid-young 90s, and I know it wasn't part of the projections and plans. I know that my family, we're working those numbers right now, and we're squeezing it as much as we possibly can. It just was never thought of as a possibility that they were going to live into their 90s right now. My grandfathers had passed, but there was one thing, and they were not families that were comfortable with the word annuity. And I'm telling you right now that I know that that's something. If I could talk to families, my family, 20, 30 years ago, I would say, are we considering longevity? Because I think a lot of folks right now think that Social Security is going to be enough. Is it?
Well, considering the debt clock, considering, I believe it was just maybe a week or so ago, that they were already talking, okay, on television, regular news channels, 4, 6, and 8. They were already talking about income taxes going to 50, back to the 50. So with that being said, you know, we have to look at everything here. But the longevity component, or annuity, is a good thing. They are a great thing for the right individual. For the right planning, they are a great thing. And why? Why is that? Because all you're doing is you're transferring a sum of money to not Wall Street. You're transferring it to an insurance company. folks, the insurance companies, they know how to mitigate risk better than anyone on the streets. So what we're doing is just transferring a little money out of the left pocket, we'll put it in the right pocket to whom? The insurance company, which is going to do what for you? Create a private pension just like maybe your mother, father, your grandmother and grandfather had back in the 60s and 70s, right? Which, as we know from studies, those who do have a pension are some of the most happiest and healthiest. Why, Spike? Because they know every month's accounted for.
Yeah.
And you know
They're
what?
not worried about that.
No, they're not worried.
Those floor of costs.
No, and we like to say to our viewers something that we have learned over the last 20 years. When a retiree can say, hey, it's Monday, but it's a Saturday. It's Thursday, but it's a Saturday. And that's what we want from our clientele. We want them to know every day is a Saturday, right?
Yeah, yeah. One of the last risks, we only have a couple minutes
Yes.
left in the show, but I do know it's part of your CPA, DNA, tax risk. Is there anything we should start doing? So as people are going to be leaving from our program here today, because we've got to wrap up,
Okay.
what kind of things could they consider about taxes before we leave here today? Should they be looking at Roth conversions? Should they be looking at a tax forward strategy, or trying to keep as much in their pocket?
You know, very, very good keyword there, Spike, Roth conversions. Folks, this is a whole nother episode that Spike and I will do.
Yeah.
But how important is that he's leading us into this at the very end? And that's why he's doing this, is because it is so important that we all know that taxes are going to do nothing but what? Increase. So would you rather pay taxes at your current day rates, or do you want to wait 2, 3, 4, 5 years? Because remember, our taxes expire. What I believe our past administration put in
And-
expires
yeah.
2025, right?
2025 or
Right at the
2026,
end.
whatever the
Right,
number
right.
is, we know
So it's
coming.
close.
It's
So
coming.
we know where that's going. Taxes are going to go up. So the Roth conversion, if you can convert now and pay
Pay less taxes
smaller tax now
on a market that's gone down.
Why
We're
would
not
you not
trying to
want to?
time the market.
Right.
It's just fact. The market's down. You got to pay taxes. Taxes are likely to go up. What can you do?
take advantage of it.
Absolutely. Mark, thank you so much for your time here today.
Yes,
We
sir.
will be back again next week. We will talk about Roth conversions. We're also going to talk about interest rate risk because we have to. Folks, if you would like to get your own complimentary review to take a look at your taxes, your investments, do you have an estate plan in place? All of this together, it is complimentary. Call 888-339-2048. Thank you for watching Let's Talk Money. We'll be back again next week.